Good afternoon. Welcome to Agrova Baltics Investor Webinar. We will begin with the company's presentation, after which we will address your questions. You're kindly invited to submit them in writing through the Q&A window that you will find below the presentation. For your convenience, we are recording this session and replay will be available shortly after the webinar. Now, let me introduce today's hosts. Jurijs Adamovics, Founder and Chairman of the Management Board, and Mihails Keziks, CFO and Member of the Management Board. Please, the floor is yours.
Good afternoon, dear investors, ladies and gentlemen. Pleased to welcome all of you to our webinar that is going to cover the results of financial year 2025. The agenda that we'll cover today is comprising of 6 items. I will walk you through the first 2 points and cover the targets for financial year 2026, and my colleague Mihails will cover the rest of the agenda. Last year 2025, was historically the best ever year for Agrova Baltics. We have reached a 92% increase in the revenue. We have reached 257% increase in EBITDA. Our gross profit was up by almost 200%. The volume of eggs that we sold is up by 47%, and this is a result of the completion and commissioning of the increased production capacity. Return on equity for year 2025 was 48%, and P/E ratio is 5.5. Key highlights for the last year. We had a very insightful year, eventful year in 2025. We did commission a major expansion project, which was a largest CapEx project we have completed ever before. We have commissioned 3 substantial buildings. 2 of those were state-of-the-art laying hen houses with capacity of 125,000 birds each. We have also commissioned a new liquid egg processing plant and a central warehouse complex, which is all located in one building. These projects were completed and officially commissioned in the May of 2025. Also, our marketing team worked very hard. We have launched quite a number of new SKUs and new packaging solutions, of which the bestseller was Family Pack, which you currently see on the screen. We have also expanded further with our new business line, FitX², which is a health nutrition and sports nutrition product line, and several food supplement products. This business is also growing quite substantially, and we've launched new products. In particular, the unflavored protein was actually a bestseller of the last year, which helped us to significantly increase our market share across the Baltics. International certifications was also a highlight of the last year. Not only we have successfully renewed our energy management certification, but we also have obtained a very prestigious British Retail Consortium certificate, which is a golden standard in the food and agri sector. With the first audit, our Aluksne production site was rated A, which is a very high evaluation of the operational excellence that our team has managed to demonstrate. Continuing on the highlights, earlier last year, to be more specific, in March 25, we have conducted a second placement, the private bond placement with CVI, which was part of the planned capital raising exercise, and which helped us to complete the CapEx program on time. We have also signed a market maker agreement with Signet, which became effective in March last year. This was done in order to enhance liquidity of our shares, and that reflects our commitment to facilitate more active trading and investor accessible solutions. Also, last year, the group itself was going through a quite substantial transformation, both in terms of the corporate governance and also our visual identity. We have rebranded the group entirely. The legal name, as you remember, our dear investors, when we joined the markets, we joined as APF Holdings. Now, as part of our international growth strategy, we decided to introduce a umbrella brand for the group, which is Agrova. And we have formed a holding entity called Agrova International, which consolidated over 81% of Agrova Baltics shares. And hence APF Holding was rebranded, and the legal name of the entity was changed to Agrova Baltics to reflect the market focus of this particular entity. Also, as a result of the changes at the shareholder structure, with Austria-based fund Accession Capital Partners becoming our shareholder at the holding level, acquiring 23%. The fund is also now represented at the supervisory board level. Dmitry Kistichenko was elected on behalf of ACP Fund, and the new supervisory board is now functioning in extended headcount. Also, as I mentioned, Agrova International was formed as a new group level holdco. And Agrova International has completed the acquisition of the Sunrise Group, which is a top 10 egg producer in the United Kingdom. Now we have completed this transaction at the shareholder level, so it does not have an immediate impact on the group. But we do believe that it also sends very strong signal to Agrova Baltics shareholders, because now Agrova Baltics is a part of much larger, operational and financially more stable group, which also helps to diversify biosecurity risks and potential financial risks in a much more efficient way. I'm now passing the floor to my colleague Michaels, who will walk you through the next agenda items.
Thank you, Yuri. Good evening, all our dear investors. So let's now walk through all the financial results that Agrova Baltics received in 2025. And as usually, we will start with the industry overview, which where the most important information for us is, of course, our strategy base idea. It's a market shift from caged eggs to the barn eggs. So as usually, we provide you the statistics for all three states. And as you can see, the situation in the market in 2025 was good. Market continued to grow, and the leader in this growth, of course, was this barn egg segment, which almost or approximately doubled in all the country, with the highest growth rate in Latvia, which was 132% comparing to the previous year. And in Latvia, we reached a market share of 63%. But again, the leader country in the Baltics is still Lithuania, having the largest barn egg share of 66%, as it was also previously. Again, Estonia is lagging behind with only 25%, but still, as you see, this segment is developing very fast in this country. And as the supermarket postponed the transfer for the later years, we expect to see the increase in the coming years, and with our current capacity and upcoming investment plans, we will be ready for this increase as well. Egg prices in all three Baltic states and also Poland, which is very active in our segment, you can definitely notice some kind of increase in prices towards the end of the year 2025. And also some very interesting structural changes, where historically average price in Lithuania was the lowest one for the Baltic states, and Latvia being somewhere between Estonia and Lithuania. At the last quarter of the 2025, the egg prices almost equalizers were almost similar for all three Baltic states, what was some way driven by increased demand for barn eggs and also increased demand for eggs in total in all categories. And as usual, Polish prices in Poland are much higher than in Baltics, so still some room for Baltic states to improve in the future. So let's review Agrova Baltics sales data. So as usually we provide a split for retail eggs sold to supermarkets and eggs to industry or to processing for the lower price, let's say. So as I mentioned, this demand for eggs in 2025 was substantial. So we managed to significantly decrease this eggs for processing by almost a half of it comparing to the previous year. It was only 11% and almost 90% was sold to retailers, to the customers in the supermarkets. Another important parameter is, of course, eggs sold to so-called private labels of supermarkets. Yes, this is a market tendency. It is increasing, and also it's increasing. The share is increasing in sales of Agrova Baltics, but still in year 2025 we managed to keep private labels only to 40% of total eggs, fresh eggs sold, which is still below, let's say, some market average, which is close to the 50% in the Baltics. Sales by geographic, by the delivery location. So as we mentioned also previously, for Agrova, we see that our home market, it's not just Latvia, it's all three Baltic states at least, or maybe even wider. But still, as you see, our core clients are the countries, the supermarkets which are targeted to sell mostly barn eggs, and as you see in Baltics, the leader was Lithuania. So in 2025, Latvia made only 40% of our sales, and Lithuania and other countries was bigger than more than half our sales, reached 60% of our sales. And then financials, and then start with changes in main operational income positions, both EBITDA. So what give us the main increase this year? It's of course was sales of our core products of fresh eggs, which was achieved by both increase in production, increased number of eggs sold due to investment phase we have completed in May and June 2025, and also favorable development of eggs due to higher demand for barn eggs. Of course, higher production capacity came with increase in expenses for feed. Other production expenses, we also face some increase in administrative expenses due to R&D and other positions. But as you can see, it's nevertheless kept the higher part of our income increase and brought us to the significant and brilliant EBITDA result, which was more than 9.2 million euros, which again is about 6% above our IPO expectations, which was 8.5 million. So very good result and proof for our strategy and for our ability to achieve result expected. Second financial slide and waterfall. It's for net profit this year. Let's see how it changed from 2024 to 2025, where we finished the previous year with some minor losses, but again increase in EBITDA. This year gave us of 6.6 more incomes and positive result to this year. What was increase in expenses below EBITDA? Of course, it was higher interest payments. As Juris mentioned previously, we received the last and closing drawdown from CBI of 5 million, reaching in total 12.5 million of debt from funds, which increased our interest expenses, also due to completion of new fixed assets construction. Depreciation have increased, and also additional flocks brought us some increase in changes in hand value. But still, again, as you can see, I'm very proud to announce that our net result for 2025 was higher than 5.1 million euro, providing a good value for all our shareholders. Final financial slides with all indicators very nicely represents our impact of the financial investment phase. So we have finalized in 2025. So as you can see, we have managed to increase our production capacity more than by 50%, and managed, due to this, increase our revenue by almost 2 times. And our adjusted EBITDA is more than 3 times higher than the years before, when we was running with a smaller capacity. Of course, this brought very nice result to all the income indicators. So our EBITDA margin reached almost 40%, historical return on equity result almost 50%. Our price to earning ratio decreased from large numbers to only 5.5, which is very nice result, I believe, for the market. Earning per shares is almost 1 year, comparing to 5-year price of a share in the market. And what's most important for us as a company under very high and investment and very rapid investment phase, our leverage, let's say, indicator, or indebtedness indicator, which is the net debt to EBITDA, decreased to just 1.2%, which is a very nice, very stable and bankable indicator, showing that the company have successfully finished investment phase and is healthy and ready for the next developments. So just to mention and run through again our main guidance we provided you in previous periods. So our results are slightly better in turnover than our last guidance, and just a little bit below our IPO guidance. But in terms of adjusted EBITDA, which is, I believe, more important for investors, we have overperformed and reached like 66-67% above our IPO indicator in 2023. So with this good notice, happy to finish financial part and maybe give few words to Juris about our next plans.
Yeah, this is the last substantive slides of our presentation, covering targets for financial year 2026. As you investors might have noticed from our media announcements, we have informed the market that we plan to implement the next investment phase, which is roughly 30 million euros in budget. We expect that this investment phase will be largely completed during 2026, and the remaining bits of it will be commissioned in the first half of 2027. As part of this new investment phase, we plan to construct 3 more barns, which will be, in terms of technology and scale, will be replicas of our previous investment phase. So we're speaking of 3 hen barns, 125,000 birds each. So this will add a very substantial additional capacity, and will be instrumental to enable us to meet rising demand across the Baltics and also beyond in Europe, as we continue to experience a structural deficit of cage-free eggs, especially by the more developed Western European markets, which we are also currently servicing. So this investment program that we're going to implement is going to boost further our shift towards cage-free production. As you might recall, currently out of 5 barns, only 1 barn is a so-called enriched cage or colony production method, which is being gradually phased out across Europe, albeit at very different pace depending on the geography. And from that angle, Agrova Baltics is very uniquely positioned because already today we're #1 cage-free industrial scale producer in the Baltics, and perhaps even in Nordic Baltics, because only 20%, actually less than 20% of our production is enriched cage. By completing this next investment phase, we'll be 90% cage-free egg producer. Dear investors, you might have noticed 2 weeks ago we made a public announcement that we aim to transition cage-free by 2028, which would imply that Agrova Baltics becomes a first egg producer in the Baltics to go 100% cage-free. And just to emphasize, this is primarily driven by our export clients, as we see that demand is growing for the cage-free barn egg in particular, which is a higher margin product. Now, we also intend to scale up on our FeedTech² product line, making substantial investments into marketing across the Baltics. We also intend to launch a couple new products later this year, which we hope our loyal customers will like, and that will also help us to diversify the revenue base. And we believe this to be a very important part of our business going forward, as we see a very high potential in the functional nutrition market. And all these initiatives will help us to improve our product mix that will allow us to shift gradually into higher margin products, thereby boosting both revenue, EBITDA, and the bottom line of the business. So this covers the presentation that we had, and we're ready to answer the questions investors might have. Thank you.
Thank you. Yes, we will now be taking your questions. Please submit them through the Q&A box that you see below the presentation. We will start with the questions submitted prior to the call, and then we'll take the rest of them. Sunrise Eggs acquisition has had a lot of spotlight recently. How this exactly benefits Agrova Baltics minority shareholders?
As I have mentioned during my presentation, it mostly benefits from the lens that now Agrova Baltics is a member of a much larger international group with an ambition to become a pan-European egg platform and egg protein-based platform. It also gives from the risk management perspective, it gives some protection to the business, from the lens of biosecurity. As our investors who follow the industry might know, the industry is going through unprecedented bird flu pandemic, and we're now experiencing a fundamental and structural shortage of egg in Europe. But speaking more broadly, because we received this question in various different formats, I understand that there might be some so to speak, bitter aftertaste that this acquisition was not done through the Agrova Baltics, and Agrova Baltic balance sheet was not used for this acquisition. And here I want to just clarify that actually from the outset we did make an attempt to do the transaction from the balance sheet of Agrova Baltics. We have approached our largest minority shareholders, which are institutional investors, from Baltic pension funds, and the moment we felt there is very low appetite, we discovered that any attempt to raise this funding through the public markets, given the size of the Baltic markets and the track record of previous issuers, is unlikely to succeed. Hence we took the decision to structure this transaction at the level of the shareholders.
Thank you. Have the feed prices catched up with the egg price growth this year? At what level do you see your gross margin going forward?
Yes, there was some increase in feed prices in the first half of the year and during the summer months, but after the harvest period in September, prices remained on the previous level. So we noticed our increase in feed prices was mainly driven by the higher consumption of feed due to increase of the production capacity. Regarding gross margin, this time we do not make any forward-looking statements. So you may understand that this price of this year was incredible. It was very good due to also some cyclogram issues that we might have. But so we expect next year to be with some moderate result, but still we believe to deliver the market best margins to you.
Do you anticipate to expand staff count at current capacities?
The current capacities are fully staffed. So as I said, all of the commissioned buildings are working at full capacity now. So the next wave of recruitment will happen as we will commission the new 3 barns.
Thank you. How much of the debt holds floating rates?
Yes, all of our debt, which now is only from CVI funds, it holds floating rates.
What risks do you see arising from Middle East geopolitical issues? Have any of them realized already?
Things, as we all know, situation is fairly dynamic and it's evolving as we speak. We don't see any, immediate substantial impact. But we are likely to face some capex adjustment, because obviously, because of the energy commodity prices going up significantly, that will, undoubtedly, affect the prices of steel, and construction prices will most likely go up. But this is something the industry across the board will face. And we are most likely going to address it through the open book contracts with our vendors.
Are you providing any financial targets for 2026?
Not at this point, as Michael has already mentioned, because we live, now in the worlds of very high uncertainty because of the conflict in the Middle East. Looking at the egg market in particular, we believe that the structural deficit of eggs in Europe is likely to extend beyond first half of this year. So all things equal, we expect margins for 26 be somewhat close to the margins we demonstrate for 2025. But again, I want to make disclaimer: we all see how geopolitical situation is unfolding. So at this point in time, we will refrain from making any very firm forward-looking statements.
Thank you. Can you name some synergies that Agrova might have with Sunrise Group?
There are no immediate synergies between Agrova Baltics and the Sunrise Group, rather than experience sharing. For example, at Sunrise Group UK, we already have a very established poultry operation. So our UK business is raising young pullets themselves. They've done it for several decades. In Agrova Baltics, we plan to commission poultry capacities later this year. So this will be quite instrumental. The experience we have in UK will obviously be transferred here. But other than that, operationally, financially, there are not too many synergies. Again, other than operational experience sharing, that also is from the fact that our business in UK is UK focused. Everything that is produced in UK is currently sold in UK.
How does the company plan to balance export growth with strengthening its position in the domestic market?
This is going to be, frankly, quite hard to achieve because we see that there is quite a bit of pressure, through various NGOs and also some international scale retailers, announcing transition to the barn egg or cage-free egg production. At the same time, we see that, and also, there are various surveys also conducted by some local prayers that when it comes to the animal welfare, the population in the Baltics, in Latvia in particular, is not really prepared to pay for that. So we believe that it will be quite hard for us to increase the market share in domestic markets and perhaps in the Baltics, because once we will complete the transition to cage-free, most likely our export volumes or the share of exports will go up, and the share of domestic sales will go down, and there is high probability that domestic markets will be experiencing an influx of cheap imports of EU non-compliant products from third countries.
Thank you. What are your thoughts on the recent defamation news we can see on media, and what could be the cause for the increases of those?
Well, on this one, I'll probably make three very clear statements. Number one, myself and the entire team, we are super proud of our farms in Aluksne, and animal welfare was and will be our number one priority. Statement number two, all those defamation and black PR, are black PR. That's what it is. All our counterparties, corporate counterparties have been informed. We had individual meetings with every counterparty. It's also needs to be emphasized that during 10 years of the operation of Aluksne poultry farm, since the current shareholding and management team took over, there was not ever a single breach of product quality and animal welfare. We are also a subject of regular announced and not announced international audits, all of which have been passed with a mark A or A+, meaning excellent compliance with the world-class practices. So this is a targeted black PR campaign, which we are currently experiencing. The law enforcement agencies and the security and police agencies have been informed. There have been some detentions, and police is doing their work. But I can assure you that the farm continues to operate normally. As a result of these attacks, we were forced to hire additional private security campaigns. But it is what it is. It's very unfortunate that this black PR is happening, but we're dealing with this and are protecting the interest of the company.
Thank you. What are the key priorities for the next 2-3 years? Production capacity, product development, or perhaps market expansion?
Well, I would probably refrain to picking one, because everything that's listed here, production capacity, product development, or market expansion, in my view, do not exist one without the other. Market expansion is not possible with additional production capacity. The next investment phase of 30 million capex is exactly going to be delivered for the reason so that we can satisfy the needs of our export clients. The product development is something we work on continuous basis across all our SKUs. The quality management of the product, new packaging. We are constantly negotiating with our corporate accounts to see how packaging solutions can be tailored for individual markets, etc.
Thank you. At the moment, the last question that we have received: do you foresee a significant increase in competition from imports in the future?
We believe that most likely it will remain at its current levels. What we have seen that during last year, there is no further increase in exports from Ukraine. And this is a result of various factors. Also, there have been a number of incidents where salmonella and other issues were registered in egg products originating from third countries. So this had somehow restricted the volumes of third countries imports. But I guess it's also fair to say that whether any additional increase will materials or not will be largely a function of political decisions, which unfortunately are beyond the influence of the company. You know, we're working very actively with industry association to make sure that the local farmers, local agri-food businesses are the priority of the government agencies.
Thank you. All questions have been addressed. That concludes our Q&A session. Participants, thank you for joining us today, and we hope to see you next time.
Thank you very much.
Thank you.
Bye-bye.